Welcome to M&F Forex Traders. This is Matthews. I hope you're enjoying your weekend. Okay, I'm here to do a trade forecast for GBPUSD. Okay, please follow along. If you have any questions, leave them down in the comment section. Okay, so on this particular trade, I found a nice setup. Okay, I saw a very nice setup. Let's check on the 1 hour time frame. I'll show exactly what I saw. So this is what I saw on the 1 hour time frame. If you can come here and focus at this level here, you see what I'm talking about right here. Okay, so we can see that market was in a short-term uptrend, right? Then gave us a high here and then it dropped. The market went to the upside and then dropped even further. The market gave us that drop, right? So right here, that goes to show that I had a level here. So this right here is my high. Okay, this is my high right there, and then I have my low here. So this is my QML, my Quasimodo label. So right here, then if you pay attention, you actually realize that there's actually a dual resistance QML. If you've been following us enough for long enough, you realize that actually I talked about this kind of QMLs. I say these are high probability QMLs. Okay, so meaning they have a higher probability of working. So these are the kind of QMLs setups that you want to be focusing on. Okay, so the ones that give you a dual resistance. So a dual resistance QML gives you a higher chance of working, meaning it has a higher probability of working, right? So this is how it is. Then this is my second resistance there. So this traps traders, right? So once people see this, they want to sell, and the market just takes them out, and the market drops. Okay. Then from here, I have my low here. So the low was somewhere here. My low and break of structure. I have my low and break of structure right there, and then yeah. So this is my low and break of structure, right? So the next thing is formation of the lower low. Here you can either count this as a lower low or the one which was formed this side. It's okay. So you can probably count this one as a lower low. As long as the structure was broken, that shows that the market actually is likely to reverse. Okay. So the next stage is identifying how the market is coming back to our level. How is the market coming back to our level? So let me just change this into small letters. So QML. Okay, so yeah. So for simplicity's sake, let's just delete this here since we don't have enough space. Yeah. So we know that we have double resistance there, which is the most important part. We have that out of the way, then we look at how is the market now coming back to our level. Okay, so your next thing to do here is to check how is the market coming back to your level, meaning you're going to look for takeouts. You're looking for tricks that the market is trying to play. So you can see from this level we have resistance here, resistance here, resistance, and resistance. So that's our level right there. So meaning this is a level of resistance, and this causes a lot of retail traders to actually sell. When they see a lot of resistance in the market, they're prepared to sell. Okay, which is not supposed to be the case because most likely that level is going to be broken, right? So we have this resistance, the level which just acted as resistance several times in the past. Okay, so this level here, yeah. Okay, so I have my R1. So I'll label this as my R1, which is resistance 1, and the next one is R2 right there. So this one here is our R1. Okay, R2 right there. R2 right here, and have an R3 here, and then market seems to have already broken the resistance that you can see clearly here. So the market has already broken the resistance there, which is yeah. So let me just put it nicely somewhere here. Yeah, yeah. So I have my resistance, first resistance here. I'll just make this as a second resistance and the third resistance here, right there. And you can see that the market has already pushed and broken. So if you are selling here, right, you had the first second resistance, you ready to sell here, the market went a little bit in favor and then took you out. That's it. That's what the smart money guys do. They want to take you out. They want to trick you into selling here when they want to buy, so that they come to a level where they want to sell from. So that's how it is. So our next level, and then let's just label this. So this is our liquidity zone. So the market has to take out this liquidity. EBT zone. So as you can see, the market has partially taken out the liquidity right there. Okay, yeah. So we got levels where the market is likely to turn from. So right here we have an MBL here, right here. So the market can either turn around from here, yeah. But we have a level here which is actually a fresh zone. So let me just label this as my MPL. This will be my MPL. So MPL is simply a level where the market has been rejected several times, where we have a lot of rejection. Okay, so this is where usually the market can turn around from, but it can either turn around from here or at the top there. So it all depends. Okay, so I'll look for a fresh supply zone. So I'll come here for my higher high, this level here. How about the 30-minute time frame? Yeah, it looks much better. Okay, so right here, this is my level. So this is a rally base drop. Okay, and then there's a level here that the market can actually turn around from here. So we just wait for confirmation before doing anything. We just have to make sure that we wait for the confirmation before actually selling. So we have a level there. By trying to find where the order block is, we reduce our stop loss. So our stop loss becomes smaller, right? Which is actually very good, because if you have a smaller stop loss, that means that you can now increase our lot size, right? So that's how it is. Increase the lot size. I mean, you reduce the number of pips, increase the lot size. So this right here is our liquidity zone, and then right here we have a rally base drop supply zone. So RBD, rally base drop supply zone, right? Yeah, like that. Okay, very nice looking setup right here. We have our MPL here. We have our QML setup here. Okay, we have a break of structure. We have our dual resistance right there. We have our level here. We have our fresh supply zone here. Okay, right there. And we have our higher high right there. We have a lower low here. The market gives us fake outs, 1 2 3, then find that the market kind of breaks, and then if you can see here, the market actually responded to this level here. So the market can either, just from here, since part of the liquidity has been taken out, this liquidity here has been taken out, so from here we can probably see the market just as we open, can just continue to drop like that. Okay, it's possible. And then another possibility is the market actually coming up to this level here and then dropping. Okay, possible. And then also the market can literally just go up. Do we know exactly what's going to happen here? We have no idea. That's the reason why forex trading is a game of probability. We only take our setups when we see the confirmation. We don't know where it's going to actually work out. We don't know. We have no idea. But as long as we keep identifying our edge like that, we know we're going to win at the end of the day. So right here, we'll be looking for confirmation around this level here. I want to see market giving me confirmation to sell here. So therefore, according to me, I want to enter right somewhere here. So my entry is going to be there. Okay, my entry is going to be around that level, and my stop loss is going to be above here. So it's going to be my stop loss, right? So let's see how many pips would that be. If the market comes here, gives me a confirmation, that's a lot. That's a lot of pips. So I'll about uh, probably about 30 pips. Okay, I want about 30 pips stop loss, and then my target is going to be this level here. I have to remember the target is going to be the next fresh demand zone. I'm seeing fresh demand zone somewhere around this level. So my take profit is going to be around here. So that's like about 400 pips. Okay, 400 pips target and 30 pips stop loss. Okay, we do the math. 400 divided by 30. So 400 divided by 30. That's 1 to 13 risk to reward ratio. Like I always say, like I said in previous videos, these are the kind of setups that we take. We don't take any setup that gives us less than 1 to 5 risk to reward ratio. Okay. So am I saying that this trade is going to work out according to what I think? Well, according to my analysis? No. What I'm saying is this is what I that's what my setup tells me. Okay, so if I have the confirmation and the market actually gives me confirmation to enter here, I'll sell. All right, and then I'll manage the trade as we go on. Otherwise, this is how it is. So this is what we're looking forward to on GBPUSD on the 1 hour time frame. uh Wait for your own confirmation. This is not a signal. This is just for information purposes only. Wait for your signal. If your signal tells you to sell, please, by all means. Okay. But if you get bent, don't come crying. That's how it is. So if you've enjoyed this video, thank you so much. I appreciate you watching. If you reach this at this end of the video, please thank you so much. Please make sure that you hit that subscribe button, like the video, comment in the comment section, and also don't forget to hit that bell notification so that every time we get to drop a new video, you get to be notified. All right, thank you so much for watching, and may God bless you, and I wish you a great trading week.